All right, we'll go ahead and kick off this first breakout session. We have Robert Harper and Josey Moore. They are both with Virginia Farm Bureau Federation Grain Marketing. Josey, I believe, also serves with the Virginia Soybean Association in a couple of other roles, but believe me, they are very knowledgeable about grain marketing, and we want to welcome them to the podium here this afternoon. Come on up.
Well, good afternoon. Again, I'm Robert Harper with Virginia Farm Bureau Grain Division. We're thankful, we're glad to be here today to be a part of this 17th annual conference. It's a real privilege to be here and be a part of agenda that's been so fruitful and really so good for us to hear so far. Thanks to all the Farm Bureau members in the audience. We always like to just give a great appreciation to you all who are doing the County Farm Bureau work at the grassroots level, and just a great reminder to each of us that we are celebrating, Virginia Farm Bureau Federation, we're celebrating our 100th anniversary this year. So greetings from West Creek and our president, Scott Sink, and thanks for all that you all do in your home counties for Farm Bureau. We've got our contact information up here. Josey and I work at the home office in Eastern Goochland County. If you're ever in that part of the world, just stop in. There's some visitor spots in front of the flagpoles. Come in, ask to see Josey or myself, and we'll show you around the building. But if you need to get a hold of us, our email is there and our phone number. We are a grain division that is a member service. This member service was started in 1953 by members from 23 different counties, and we're doing the same thing today that we did when we started in 1973, trying to help you all with market advice, trying to give you access to trucks to get your bushels moved to destinations. We do have a hedge account. We can help you buy and sell futures and options directly, and we can book bushels directly for you. 30 different destinations we're shipping to: country elevators, exporters, feed mills, flour mills, Pennsylvania, Maryland, West Virginia, Virginia, and North Carolina. And really our theme this year is steady optimism. We think we have a lot to be excited about and a lot to be thankful for from a market perspective. And we hope that's going to come home today during the short time that we have with y'all. So on the first slide here, we always like to start off and think back. We're trying to get your minds wrapped around market trends. Where are futures prices going to go in 2026? What about local basis? Where is that going to go in 2026? So let's just take a look at a few headlines today. Brazil, 25% harvested on their soybean crop coming into this week. We know they are the world's largest soybean producer. They are expecting the largest crop in their history. If you do the math from their government stats agency, they're expecting about 6.5 billion bushels of soybeans. So lots to think about there in price direction this year if the world's largest soybean producer has the largest crop in the field. We know we have dryness building way down south in Argentina. Do we think that is baked into the futures part of your cash price yet? No, we don't. We think if we get another 10, another 20 days in Argentina without needed rainfall, you could see more futures price rally. Remember, we are in a pure weather market on the Chicago Board of Trade when it comes to corn and soybeans this time of year. It's just not northern hemisphere weather, it's southern hemisphere weather. And remember, in Argentina, generally speaking, they plant corn as a first crop and beans as a second crop. Generally speaking, in Brazil, they plant beans first and corn second. So the planters are going right now in Brazil behind those combines cutting the beans. We've got record-breaking demand for U.S. corn. This is something that we really want to celebrate. We're really in about month number 15 of outstanding demand for U.S. corn. Next week will be the 4-year anniversary of the invasion of Ukraine, and Ukraine is doing a great job in a whole lot of ways, but they're not able to export the same amount of corn that they used to. Ukraine was a top 5 corn exporter in the world. The United States has picked up a fair amount of that business that Ukraine would have been exporting to the world. And we also need to remember that Brazil is keeping a lot more of its corn at home, and they're grinding it for ethanol. So our great big export demand on corn is also coming from Brazil exporting less. Wealth creation, we got to think about how money flows, how money moves. We got the stock market futures indexes at all-time highs, and one of the key indicators this year for Chicago wheat, corn, and soybean futures is not only what is crude oil going to do, but it's what happens if we have a correction in the stock market. Think about ethanol production. You've seen a lot of information really over the last 10 years about the government allowing refiners to blend 15% octane as ethanol into the gas supply in the United States year round instead of 10%. Congress dropped that a couple of weeks ago. That would create an amazing amount of demand for U.S. corn if we went to 15% ethanol from 10%. But remember, we are breaking records almost every week as well on how many bushels of corn are getting ground for ethanol. Our ethanol plants are running near capacity. So if we do get permission, E15 would not be a mandate. It would be permission by the government to allow blenders, refiners to use ethanol up to 15%. If we do get that, we're going to need to have more ethanol plants created. Again, headline today, February 18th, we're still processing the annual crop report from USDA on June the 12th. China has been very active, as you all know, buying U.S. soybeans. And remember, they can get beans a whole lot cheaper in Brazil than they can get them here in the United States. They're buying beans for us from political reasons, and we got to see whether or not they're going to keep doing that. And we're still market watchers, corn, wheat, beans. We're still trying to process what happened and how our government is using the military in Venezuela. When we look back, thinking about trends, when we look back from last year, we got a new president, we got a new ag secretary. It was the second highest year of input prices that you all have had in your farming career behind 2022. Everything went up except for fuel. And that's another big question mark, again, back to the situation in Venezuela. Remember, the computers trade futures now. Humans don't trade them anymore, and we're about 3 years into artificial intelligence systems trading futures, and money moves quick and money moves fast, and those systems trade corn futures alongside of crude oil futures. They see them both as energy. So you think about the situation politically with the U.S. Navy not far off the coast of Iran. You think about what happened in Venezuela. And when you think about what could happen in 2026 from a futures price perspective, if crude oil went from $60 a barrel to $100 a barrel from a political side of things, you could see a significant rally in corn futures this year that doesn't have anything to do with anything fundamental. Last year, one of the top 5 ag stories, Josey and I talked about it a lot, was the dicamba label. That was a big deal on a lot of, 80 million soybean acres across the United States. We had a huge increase in corn acres last year, and it looks to be the same way this year. We'll get to that in a minute, but the prices for November beans and December corn future still favors heavy corn acres. Now, tomorrow and Friday, the 103rd annual, I believe it is, USDA Ag Outlook Forum will take place in Northern Virginia, and you're probably going to see a 95 million acre number again for corn this year in the United States. We got a big, beautiful bill in place of the Farm Bill. We know about beef cattle prices, both feeder and live, and what they even did on the futures board yesterday. We know about fertile egg prices, table egg prices last year. All that played into how futures markets moved and how money moved from a corn, wheat, and soybean perspective. And before we leave this slide, think about ag labor uncertainty with the immigration issues, and think about the Ukraine situation, and think about all the data that the trade did not get during the partial government shutdown last fall. So y'all are, I've heard the word a lot today walking around in the trade show and with the great speakers that we had about return on investment. Y'all are excellent in your businesses and running the calculators, sharpening the pencils, figuring out whatever your input is, how am I getting a return on that input? How am I getting a return on that investment? You're very efficient and you're productive. So Josey and I, in our role as market advisors, we try to get y'all to take that same standard that y'all put towards these input costs and return on investment. We try to get y'all to take that to your output side. How do you take that efficiency to your output side? We know we get a second chance every day. Today's only February 18th we'll ever get this year. This is the only 2026 we get. It's very emotional. Romance and finance are very emotional. Grain marketing is in the finance area. It's very emotional. But if you feel like you didn't do a good job last year, this conference today is a day that you can sit and say, I'm gonna tighten my belt a little bit in this part of my operation. I'm gonna focus a little bit more on marketing my outputs and being proactive, and know that you do get a second chance. You're gonna struggle and feel behind all the time if you're trying to predict the market direction, whether that's local basis or whether that is the futures part of your price. But if you know your break even, and we're going to say that today a few times, the most important thing you can do in marketing in 2026 is to know the break even cost. We're thinking about profit per acre. We're not talking as much about bushels per acre. We're talking about profit per acre. And the most important thing you can do is know what that break even is on that bushel. And you can do that really well with a $14.99 calculator. And once you know that break even this year, you're going to be able to sell with a lot of confidence. And if we're trying to guess market direction, remember, it's called a futures market because folks that bet on price direction are literally trying to predict the future price of a bushel of corn in a specific month on the Mississippi River and the future price of a bushel of soybeans in a futures month on the Illinois River. You can't do it. So you know what you're doing when you're selling profit, and you know what you're doing when you're selling positive margins. So steady optimism, Josey, in 2026.
Yeah, and as Robert mentioned multiple times about being proactive, that's obviously going to look very different from farm to farm. And so when we say be proactive, that, like he said, having written down goals and metrics that you're planning to use on your farm is the first step in that. But staying on top of that marketing plan and being aware of where you're at on your sales goals, and we'll get a little more into it when we get to how we're going to recommend to you guys to market into 2026. But just remember, there is no right or wrong way to do a lot of these marketing things. It's what works best for you and what works for your farm. So if anybody has any questions throughout this, make sure you do wave us down a little bit, because we do want to make this applicable to you and your farm. So when we get into what does it look like when you are marketing? So from Robert and I's perspective, this is the most simplistic form of what that looks like as cash price. So we're looking at the futures, the Chicago Board of Trade, obviously. If you guys do not have an app you use or anything like that, you can just go to the CME group. That's kind of the easiest one. Just a reminder, all of those are on a 10-minute delay. So if you talk to your broker, sometimes the numbers will be a little off, but that's because if you're not a broker, you don't get a live quote screen. Not really sure the rules behind that, but CME Group's a great free tool for you to use to check on these prices every day. Basis, just a reminder, that's what they're paying above or below the Chicago Board of Trade in your specific market. We kind of like to break down the state in a couple different ways. Obviously, the Harrisonburg market, very corn intensive market. Then you got more towards the beach, which is a very soybean intensive for export. And then you got a little more south side options, it's like that we can talk a little bit more in. Your last component of cash price is essentially freight. And so a lot of times people go, well, I haul for myself. Good, but make sure you're accounting for that as a cost. Your time is valuable. The cost of running that truck, the tires on the truck, the fuel, all of those things should be something you take into account. Very frequently, we like to recommend that you break that cost into a per bushel cost, because it makes it easier for you guys to understand at what level you're being profitable at the bin. So very important when you take that into account. We have an equation here at Farm Bureau that we use. We're more than happy to share that with you guys. I can talk about it anytime with you, but we give that out to everybody. What we pay our trucks, we're very transparent with that, because everything, when we do trucks for people, we give them every cent. We don't arbitrage any freight rates or anything like that. So we're more than happy to do that. You can use that for your own truck as a metric too. So these are the three main considerations for your cash price. When you're looking at marketing, I think more than anything, the last couple of years has shown us that it's just like it's important to diversify on your farm, it's very important to diversify your marketing plan. So we've seen a lot more of alternative sales contracts become a growing metric. So cash, I think, is always going to be a steady form for us here in traditional commodities. But when we get to looking at basis futures and minimum price contracts, those are really important to at least have a basic understanding to see if that can help you. When we talk about basis, for example, that's a reminder, you're liking the price that the elevator or the mill or the exporter is paying you above or below, and you can wait and price off the futures board if you think there's upward mobility or honestly you wouldn't want it to be downward, but there is the downward side of it. But so just getting a little more familiar with some of these, there's a lot of incredible buyers across the state of Virginia, and actually in our surrounding states too, that we get fortunate to work with, that would love to sit down and talk to you and help you establish if diversifying your marketing plan is a good option for you. But just having a basic understanding of that helps you to mitigate risk and hopefully increase your profitability. And before we get into recommendations, I know you guys look at this all the time. You're like, great, the Chicago Board of Trade. But the main part about this slide I want to highlight is in the red, you can see in reference to where we were a year ago. So this is the close as of last night. I wanted it to be fresh for you guys. So what's really beneficial to look at on this slide is when you take into account the basis, the positive basis across the board almost that Virginia has. I tell everybody I started my career in grain in the Midwest, and so when I came to Virginia, I was shell-shocked to see some of the numbers, because in a lot of places where I used to work, I got very used to negative basis. So with positive basis and even with your freight costs, on the former slides, you saw that fuel has gone down compared to some of the other years. So even taking into account your freight costs with where December corn is, November beans is, and July wheat is, well, not July wheat so much, but corn and beans, there is a level of profitability here if you guys are being very cognizant of what you've got going into your input costs and where you're marketing to. But as you can see, compared to a year ago, definitely beans, we've seen a little bit of an upward tick. That's a lot of volatility has been in the soybean market. So we've seen that a lot more volatile than the corn.
When we think about those four different kinds of contracts, Josey and I like to see folks that we work with advise them to be using at least two of those four. If you're only using one of those four, that's fine too. I think the point Josey's making is very important. There's no one size fits all. Know the contracts, know how to use them, know what's comfortable for you. When we think about old crop marketing, this would be what you would have at the elevator right now that's not priced, or what you would have at the home farm in the bin. Precedent doesn't seem like it means as much now as it used to, but if you look at 40 years worth of futures charts, 8 years out of 10, you're going to see corn and soybeans go lower from the 1st of July till harvest. 8 years out of 10, 2 years out of 10, they're going to go higher, and usually that's something political or that's something weather related. So one of the first things we talk about in old crop marketing is have the goal of building a fence and having all of your old crop bushels, if you can go all the way out, the far out as you can go, have them all priced by July the 1st. We're going to establish that break-even price. We're going to set our sales targets above that break-even price, and we're going to set our delivery periods. If you had 50 loads in the bin, if you had got 5 months to get them out, you might say, I'm going to deliver 10 loads a month. I'm going to price 10 loads a month at my targets. If my targets don't fill, you still have to have decision deadlines. One of the things that's hard for us to do, helping you all market, is putting these wish orders in the computer, in with the buyers, and we're doing the right thing. We know our break even, we've got our target prices, but we don't put decision deadlines on those target prices. And we would advocate to you, whenever you put a wish order in to price some of your hard-earned production, make sure that you've got a decision date. If you don't get that target in 30 days, we're going to advise you, if you're above your break even, to just make that sale and then move on, and then make that sale and then move on. A lot of you all are good at marketing old crop and new crop at the same time. Some of you are even going out even into 2027 now. Those of you that use futures, and you're marketing really 3 crops at one time. So you grow it to sell it, and you have to make decisions. And it's important when you write this all down on a sheet of paper that you're putting sales targets, delivery periods, percent of crop to sell, and decision date deadlines. Y'all know you wouldn't be here if y'all weren't good at relationships. We know everything we do is a relationship business. The folks that you all sell your production to, they want the relationship with you. And make sure that's one of your most important relationships, or multiple people. We're always advocating that you sell to multiple people, multiple relationships. Make a point to call those folks every couple of weeks. Establish that type of communication with them. They know your voice when they know your number when it pops up on their phone. That's very important. So a little bit on old crop. If we move into the new crop marketing right now, we're doing the same thing, but it's a little bit of a guess because we haven't bought all of the inputs yet for this crop. We don't know exactly what that break even is going to be from the input side, and we don't know exactly what that break even is going to be from the yield side either. But we're going to say just use your best guess. It's okay to say that word, guess, when you're trying to come up with that break even on new crop. And we like to get y'all to think about priority bushels that you're going to have to sell at harvest time for whatever reason, for a cash flow reason or for storage reasons, because it's a sharecropping agreement with a landlord, whatever it might be. Think about your priority bushels first, and those are going to be the bushels that when Josey and I get to talk to you on the phone, or you talk to your buyers on the phone, those are the ones you want to look at first. So first thing is work with USDA, FSA. What an opportunity we have, and select that farm program, whether you're ARC or PLC. This has got to be the backbone of your marketing program. And then y'all know what the other backbone of your marketing program is, in our humble opinion, not saying it's right, just giving you our opinion, is make sure you're sitting down with your crop insurance agent every year. Even if you're just replicating last year's policy to this year, it's a great time spent to sit down with that crop insurance agent and make sure you've got that safety net all set up by March the 15th. Once you've done those and you look at your average production history, you saw that slide that Josey showed you a minute ago with December corn futures, with November soybean futures. You've got your enterprise budget, whether it's on paper, whether it's on an Excel spreadsheet. It's pretty clear. The budgets we look at on a daily basis, we can lock in really good profits right now for new crop corn and for new crop soybeans this fall. If we get, I know it's a big if the good Lord makes it rain, and we'll deal with it if it doesn't, if He doesn't. But we're wanting everybody we talk to today, a take home is to be 20% sold. If you're comfortable with forward contracting, we work with a lot of really good farmers and marketers that won't sell anything until it's in the bin, and that's fine too. But if you're comfortable with forward marketing, we would like to see everybody 20% priced right now. And if we get market volatility to the upside between now and when you go to the field with the planter and the drill, you can be up to 40% sold with your farm program selected, with 5 years average production history, and with the crop insurance. We don't want to go over 40%. It's not your job in your marketing program to add risk to what you're doing. Your job in your marketing program is to limit your risks. So think about that today on the new crop side of things.
And off of that, if you've been to any of our presentations, you hear us say all the time, sell early, sell often, sell in small increments. Mm-hmm. You guys make a bazillion decisions a year, a day on your farm operation. We want to give you guys a little more peace of mind. And selling in those small increments on a regular basis helps to minimize that risk. Our goal whenever working with any of our producers is for that profitability measures to be made, that break even to be beat. So when you're selling those small increments, it is important to do it at a regular basis, regular time. Set those deadlines, stick to your deadlines, because then you have a lot less stress about looking back and seeing what you could have done.
Mm-hmm. A lot less. Yep. A few things. We know 2 weeks ago today, President Trump posted on social media that China might consider buying 8 million metric tons more of soybeans. And y'all, thank you to the Farm Bureau members. We're fortunate we have a live quote screen. Soybeans went up 51 cents a bushel in 10 minutes after that post came out. The AI, the computers saw it. Money flowed into beans on the buy side. There's going to be so much that's going to move futures price this year in the information age, whether it's weather, politics, something fundamental, something we can't predict. But some of the things we know, we want you all to know what's on this slide right here. Every month we get a crop production report and a World Ag Supply report, a WASDE, you'll hear it called. The hardworking folks on the World Ag Board, the hardworking folks at National Ag Statistics, they survey you all by the thousands. They publish that data once a month. The markets trade off of that data. Sometimes we don't agree with what it says, whether it's yield or acres, etc., but the reality is it is the truth that the markets trade off of. So you want to know every month, and it's usually between the 10th and the 12th of the month when those crop reports are going to come out. Talk to your buyers, call them and say, hey, what do you think? What do you think USDA is going to say next week? And how do you think that's going to affect price? We also know that our hardworking extension agents, 3,000 in some counties, right, in the U.S., they turn data in to USDA on Friday afternoons, and that data gets published at 4 o'clock on Monday afternoons, the crop progress report, county by county, state by state. When the board opens, remember, futures trade 17 and a half hours a day in Chicago. It's the session opens at 8 p.m. for the next day. Today's Wednesday, so the Thursday session will open at 8 o'clock tonight. If you see the board jump on a Tuesday night at 8 p.m. when it opens, from May to October, it's probably because of that weekly crop progress report is showing something that's either good or bad for price. We get export loadings reports on Mondays. We get the export sales reports on Thursdays. And no kidding, if you're paying attention, you saw something nobody had ever seen last Thursday. It was the largest weekly export sales for corn in history for that week. It was over 80 million bushels of corn we sold overseas, mostly to Japan and Mexico. But that came out on Thursday morning, and corn went up 8 cents. So you want to know when these reports are. Tomorrow and Friday, again, I mentioned it, you're going to get so much data from USDA tomorrow and Friday. The markets will react to it. They're going to react to what USDA says on acres, trendline yields. It's going to be amazing. And you got to write down March the 31st and June the 30th, the prospective plantings report, how many acres the U.S. farmer is going to try to plant. And then we got to wait till June, Josey. That is a limit up or limit down day on the Chicago board when we get acres put out there. So you really want to have some wish orders in place before March the 31st and before June 30th, and in our opinion, you grow it to sell it. Like Josey said, sell it early, often, and in small percentages above your break even. We're going to sell some bushels before that report comes out, and then we're going to sell some after if we get an opportunity. So just some things for y'all to think about each week. All this information is very easy to get.
I'm going to go quick through the next couple ones because they're just mostly graphs that you guys have probably seen a lot. But the next couple of charts, you'll see a trend from 1996 all the way to 2024. So basically, this is just showing our corn yield continues to grow. Genetics keeps getting better. You guys keep getting better at your job. So corn yields on that trend line still coming up. 186.5 bushels per acre is what we are pushing.
Record yield and record acreage.
Record yield and record acreage. This is the corn production. Just a note on here, because obviously in Virginia, it's going to be a little different when you see the production number. This is in billion bushels for the U.S. So you can see that we've stayed pretty. We had record, like Robert said, record yields, record production numbers on the corn. Going into soybean, same thing. We're following that trend upward. Just incredible genetics, incredible farming that we're doing here in the United States. So we've seen that grow for the last 30 years basically.
Mm-hmm. Yeah.
And same here with soybeans. Soybeans have stayed a little more on trend, as you can see. They're still fighting against obviously South America and their exports. So definitely something to be aware of as we come into this marketing season. When we look at Virginia production numbers, this year, corn at 58.8 million bushels. So when we see our local basis impacts there a little bit, in general, we like to estimate, our opinion is the needs in Virginia about 60 million bushels. On that, our average yield 168 per acre. Obviously, that's up 47 from 2024. We know 2024 was rough on corn, but from 2022 to 2023, they were up 23%. So that kind of puts it a little more in perspective because 47% sounds a lot. Acres have pretty much stayed pretty steady on that number. Looking at beans, 22.4 million bushels. What we've really seen the grow of, definitely since I've been in this position the last 7 years at Farm Bureau, is an increase in containers. So shipping containers, that's been a big push on the Soybean Association, all of those interest groups. Essentially, the United States sends a lot of shipping containers empty across the ocean. So the big goal of us is we want almost all of those shipping containers that are going empty, we want them full of ag products going back across. So we've really seen a growth in that. They're very, right now, the cost of containers has made it very applicable for a lot of operations. We're going to see more of that going forward. They're putting in new facilities down in Chesapeake, increasing productions on places that already have them. We've seen Maharan start using a lot more, Produce using a lot more. So a lot of companies are really looking into this because of the cost of shipping them and how easy it is to put in these facilities in Virginia without the infrastructure. So yield 38 bushels per acre, down from 2024. Our acres are also a little bit down on that number.
Yeah, exciting stuff just to know a little bit about the nuts and bolts of Virginia. Thinking about this year, with most of y'all having maybe 20% flexibility in your crop rotations, we don't really see acres in Virginia changing. This is pretty similar, around 600,000 acres of beans every year, around 350,000 acres of corn in Virginia that gets shelled for grain. It's about 150,000 more than that gets chopped for silage. That was one of the surprises from the January 12th crop report. The USDA found another 1 million acres of corn from the November crop report to the January. There's a few reasons for that, but one of them is excellent rainfall in the upper Midwest. The silage yielded a lot better per ton per acre, so less was chopped for silage and more was shelled for grain. And just highlighting what Josey said, soybeans are going on 40-foot shipping containers right here in the valley, all over Virginia, and they're going to everywhere in the world other than China. China likes to purchase beans in bulk vessels, and we only have one wharf in Virginia on the Elizabeth River, 50 foot of water, and the big bulk vessels can come in there and get the 1 million bushels on a vessel on the little boat, the 2 million bushels on the big boat. Those boats are going to China, but all these containers are going to North Africa, they're going into Europe, they're going into everywhere in Asia other than China. So a big market, lots to be optimistic about, a growing market for your beans. So we strive a lot to say, have a written marketing plan. We've got a sheet of paper up here that Josey's going to hand out. This is just a guide. You take this home with you. Our main thing is not to just say, write this down on paper, but to give you a template, to give you a little bit of a help to know how to start writing a marketing plan down on paper. And remember, when we're thinking about pricing, it's not as much as looking back to where prices have been. That's important, but it's more about looking at where prices are going to go in the future. So we're selling early, we're selling often, and we're selling on rallies. Josey, have you got that clicker? Can you move it forward a slide? So what about trends this year? What about what's going to happen this year? Just briefly, as we're coming to the end of our time here, politics are going to obviously influence future price direction, tariff and trade, how the speculators want to move money around, who's going to be the next chair of the Federal Reserve. Y'all, that's a big deal. Weather, government, Argentina, South America, U.S. acres. So lots of things to think about. And I'll say this, we've got just as much chance for futures price to go higher as we do to go lower. Remember the 17 billion bushels of corn that we grew this year. We need every bushel of that. It's being exported and ground for ethanol, and just you're going to have to make decisions fast. You got to gather information every day, and when you see a rally, you have to make those small incremental sales or have your wish orders filled. Now, we got 2 take-home prizes for you. We got 54 seconds left. We appreciate y'all's attention. We want to help you. Remember, George Washington said, "I would rather be on my farm than emperor of the world." Y'all do a great job at what you do, and we wish you the best success, productivity, and safety this year. First question, first door prize we're going to give away here. What is the most important tool in a grain marketing plan? What's the most important tool in the grain marketing plan? First right answer gets a calculator. A calculator. Yep. Right over here. All right. So, most important tool in grain marketing is a calculator because you got to know your break evens. The second thing we've got here, a lot of y'all are these whiteboards. Put this in your shop somewhere or in your office. Write on it all the places that you're delivering your bushels to and what month you've got to deliver them to, just so you can see it clearly. It's hard for y'all to keep up with all that stuff. The person who can say the three parts of the three parts of your cash price are what? Futures, basis, and freight, right here up front. Thank y'all for your attention. We'd be glad to answer any questions afterwards, but that'll conclude our conversation. Thanks for your attention.
Thank you, Robert, and thank you, Josey. We will take a moment for a couple of questions. I'm not sure if we still have a microphone handy, but okay, yeah. Okay. How about any questions? Boy, I tell you what, this is very important stuff. If you can grow it, you've got to market it.
Mm-hmm.
Hey, thank y'all for the presentations. What is the mechanism by which, if we were to sell through you guys and market our grain through you guys, we've got on-farm storage, you guys set up the trucking, how exactly would that work in the real world? Like, you would schedule it some kind of way ahead of time, or how does that work as far as letting us know and getting that done logistically?
Yep. Yeah. Great question. So it's really easy to set you up as a vendor in our accounting system under whatever entity name you would like to be set up under. We represent you, the grower, so everything's transparent. If we're working on a specific bushel amount, we're going to help you find where the best net price is from working the basis to freight spread. We'll agree on where we're going to sell it and what month we're going to sell it. Then on your behalf, we sell it to the destination. The bushels get delivered in Virginia Farm Bureau's name. We do work with 22 different independent trucking companies. We get those drivers. We're on the phone with them all day long. We can allow them to be as connected to you as you want them to be. Some of our members that use the service, the truckers like to deal directly with you. Some like to the farmer wants them to deal directly with us, so we'll work that to your advantage. When they get to the destination and they deliver your load, they take a picture of the ticket. They text it to you and to me and Josey at the same time. We process tickets every day. Farm Bureau pays twice a week on Monday and Wednesday. So you'll see the ticket at the same time that we see it, and then the settlement will go out with the payment, direct deposit or paper check, whichever you prefer. Mm-hmm. Yeah,
Great
thanks.
question. Great question. Any other questions?
This is a little bit off topic, but I was going to ask you all if you do work at all with the other grains and niche markets and small farm products.
Mm-hmm. Josey.
Yeah, we do. So essentially our bread and butter, I guess, is corn, soybeans, wheat, but we do oats, barley, sorghum we've definitely got into. Robert's got a cool program going right now, trying to get some more of those small grains to match with some bird seed companies, basically. And he could probably talk a little bit more about that. But we also do some small farm-to-farm stuff, too. Some people like to utilize this when they're selling to their neighbor or someone down the road or even the county over, just because we'll pay you right away. You don't have to bug anybody for money. So we do some of that as well. But yes, lots of different commodities that we can help you with. We do some feed ingredients work too. If you want to touch base with us on that, we can broker some of that as well.
Yeah, thanks for the question.
Any other questions?
Question: do we do any brokering of poultry litter? No, sir. Mm-mm.
But some of our trucks would love to help you with that.
Yep.
Well, Robert and Josey, thank you very much for lending your expertise to our conference here today. We greatly appreciate it. Thank you very much.